You know, when you think gold and diamonds, what usually pops in your head? Sparkle, luxury, maybe a big occasion.
Right, probably the glamour, the special moments.
Exactly. But behind all that, there's a whole fascinating business side, isn't there? How these treasures actually get to market.
Oh, absolutely. Especially from companies really trying to scale up, aiming for a global reach.
And that's precisely what we're diving into today. We're looking at Sky Gold and Diamonds Limited.
Right. They just changed their name, didn't they, from Sky Gold Limited.
They did, just effective July 23rd, 2025. And our focus is their brand new Q1 FY26 financial results, the quarter ending June 30th.
So fresh numbers.
Very fresh. We've got the financial disclosures, the media release, and our mission really is to cut through the jargon.
Yeah, get to the core insights.
Exactly. Understand their strategy, what these numbers mean for their big ambitions. Think of it as your shortcut to getting up to speed on a really interesting player in jewelry manufacturing.
Sounds good. Where should we start? The headline numbers.
Let's do it. The shining performance of Q1. What jumps out from those results? How did they kick off the fiscal year?
Well, the first thing that really grabs you is the scale of the growth. Consolidated revenue from operations hit 11,131 crores for the quarter.
11,131 crores. Wow, how does that compare to last year?
It's a huge jump. We're talking a 56.5% increase, up from 723 crores in Q1 FY25.
A 56% jump in one quarter.
Yeah.
That's pretty dramatic acceleration, isn't it?
It really is. It definitely signals some powerful momentum right out of the gate.
Okay, so massive top line growth. But what about profitability? Did the bottom line keep pace as they scaled up like that?
Yeah, that's where it gets arguably even more impressive.
Yeah.
Gross profit surged to 90.3 crore. That's up nearly 97% from 45.9 crores last year.
Almost doubled the gross profit.
Exactly. And their EBITDA, earnings before interest, taxes, depreciation, amortization, that came in at 71.4 crore, up 91.5%.
Right. Strong operational profit. And the net profit, the PAT.
That's perhaps the most striking figure. Profit after tax, the PAT, landed at 43.6 crore. That represents a phenomenal 105.3% increase from 21.2 crores in Q1 FY25.
Whoa, hold on. They more than doubled their net profit year over year.
They did, which really is just they're managing their costs exceptionally well, even while pushing for that rapid expansion.
That's quite something. Now, the company often talks about being 50% leaner than peers. These diligence pad at 3.9%, EBITDA at 6.3%. How do they actually reflect that? Are those strong margins for this sector?
That's a good question. A 3.9% PAT margin might sound low in some industries, but for a B2B jewelry manufacturer operating at this kind of scale and growth trajectory, it's actually quite solid. It suggests that lean structure isn't just talk. It seems to be a real competitive edge. Often you see margins squeezed during rapid growth, but they seem to be managing both quite effectively. The 6.3% EBITDA margin backs that up to strong operational efficiency.
And just to add a layer of confidence here for listeners, these are unaudited results, but they were reviewed by their statutory auditors, VJSHAH and CO, right?
Yes, and they received what's called an unmodified report.
Which basically means
It's essentially a clean bill of health. The auditors looked at the numbers and didn't find any major issues or misstatements. That's pretty crucial for trust, especially with such fast growth and big strategic plays happening.
got it. So how does management see these Q1 results? What's their take?
Well, the managing director, Mr. Mangesh Chauhan, put it quite clearly. He said this Q1 performance lines up perfectly with their big vision building that 7,600 crore company by FY27.
Okay, so it's on track with the long-term plan.
Exactly. He highlighted strong traction in exports, product innovation, getting new clients. It frames these numbers as part of a deliberate strategy, not just, lucky quarter.
Right. So if those are the impressive results, let's talk about the how. How did they actually achieve this growth? What were the key operational moves?
There were definitely several key drivers. One big one was product innovation. They added 18 KT lightweight jewelry to their mix.
Ah, letter gold.
Exactly. And that's been really effective because, gold prices have been high. So customer preference naturally shifts towards lighter, maybe more affordable pieces. It made their offering very timely.
Smart move, adapting to the market. And it sounds like they've been busy winning new clients too.
Oh, absolutely. That's crucial for a B2B player. They secured some really significant new client wins. We're talking big names.
Like who?
Aditya Birla's Indria, Reliance Retail, Carrot Lane, PN Gaggill, PM Jewelers, Pothies, Vega. Quite a list.
That is a strong roster. Why are these specific partnerships so important?
Well, they massively boost Sly Gold's visibility and reach, especially in what they call high-velocity regional markets in India.
High velocity.
Areas with really fast consumer turnover, lots of transactions. Getting into these channels means the products can move quickly, which is great for inventory management.
Makes sense. But bringing on so many large clients at once, does that create pressure? Strain on their operations, maybe?
That's a very fair point. It definitely can. Integrating major clients demands really robust supply chain management, tight production schedules, good client service.
Yeah.
But given their focus on lean operations and the plant capacity increases we might get into later, it seems they're trying to build the infrastructure to handle it.
Okay. And beyond the domestic market, you mentioned exports earlier. How's that side of the business developing?
Exports are really becoming a significant story. Their contribution rose to 12% of total revenue in Q1,
Up from what?
up from 8% in the previous fiscal year, FY25. So a clear upward trend.
And they have ambitions for more,
Yeah,
right?
yeah. The target is pretty ambitious, getting exports to around 25% of revenue over the next 18 to 24 months.
A quarter of their business. Which markets are key there?
They're really focused on the Middle East, Malaysia, and Singapore. These are markets known for strong demand in handcrafted jewelry, which fits their profile.
And speaking of the Middle East, I saw a note about setting up shop there. A new entity.
Yes, that's a very strategic move. They acquired a newly incorporated entity as a stepping stone towards a full sales and distribution office in Dubai.
In the UAE. Why Dubai specifically?
It's positioned to tap directly into that rising Middle East demand for the kind of jewelry they make handcrafted, often lightweight. It's seen as a really key pillar for their export growth. Having boots on the ground helps immensely.
Better market understanding, faster response.
Exactly. Stronger client relationships, too.
Okay. So product innovation, new clients, export push. Anything else driving this performance on the operational side?
One other interesting thing is their focus on adding customers using the advanced gold model.
Advanced gold model. What does that entail?
Well, typically the manufacturer finances the gold,
Right.
which ties up a lot of cash, a lot of working capital.
Sure. Gold isn't cheap.
Precisely. This model likely means the clients provide some gold up front, or maybe there are specific payment terms. The point is, it reduces Sky Gold's own need to fund that raw material inventory.
Ah, so it frees up their cash.
Exactly.
Mhm.
It's expected to boost their Pareto margin and their ROCE return on capital employed because they're deploying less of their own capital in inventory. It optimizes the working capital cycle.
Very smart. Okay, so beyond the headline growth, there were also some internal corporate moves this quarter. Can you walk us through those? Restructuring, share activity?
Sure. They were definitely making adjustments. First, they sold off a wholly owned subsidiary called Sky Gold Diamonds Ltd. back in April.
Was that significant?
They noted it wasn't a material subsidiary, so probably not a huge financial impact, more like streamlining their structure, perhaps focusing resources.
Okay, trimming the portfolio. Anything added?
Yes. Conversely, the board approved buying 100% of a company called Miss Sky Souk Jewelry Trading LLC in June. This one is proposed to be a wholly owned subsidiary.
And Sky Souk. That sounds familiar.
Right, that's directly linked to the Dubai expansion we just talked about.
Mm-hmm.
It's the vehicle for that Middle East sales and distribution push. So a strategic acquisition.
Got it. Shedding non-core, acquiring strategic. What about shares? I saw something about warrants being converted.
Yes, on June 26th, they converted 207,000 convertible share warrants. Now, these converted into a much larger number of equity shares, 2,070,000, because of a previous bonus share adjustment.
Okay, so new shares issued.
Right. It happened once they received the remaining payment from the warrant holders. And importantly, these new shares rank pari passu,
Meaning?
equally. They have the exact same rights as all of the existing equity shares, no special classes or anything like that.
And one final clarification point, their earnings per share, the EPS figures, they mentioned an adjustment.
Yes, the basic and diluted EPS for Q1 FY26 were both 2.97 rupees, but they specifically noted these figures were adjusted and restated.
Why the restatement?
It's to account for a bonus share issue that happened back in December 2024. A bonus issue increases the total number of shares outstanding without bringing in new capital.
So it would dilute the EPS if you didn't adjust.
Exactly. By restating, they're making sure you can compare this quarter's per share earnings fairly against previous periods, giving a truer picture of earnings growth despite the changed share count.
Okay, that makes sense. We've really unpacked the Q1 performance and the mechanics behind it. Let's zoom out again, connecting these results and moves to the future. What's the grand vision here? What kind of company are they building?
This is where it gets really ambitious, I think. Sky Gold Diamonds is clearly stating a goal: transform into a globally dominant, design-led jewelry powerhouse.
Globally dominant, strong words.
They are. And they've put a number on it, a target consolidated revenue of 7,600 crore by fiscal year 2027.
7,600 crores. That's a massive jump from where they are now, even with this strong quarter. How do they plan to get there in just a couple of years?
A huge part of it is that capacity expansion we touched on earlier. They've bought property and are planning this enormous 540,000 square F integrated jewelry park.
Right, the 500,000 square foot facility.
Yeah. The specific goal there is to double their monthly production volumes by FY27,
Double the output.
which would position them as one of India's largest vertically integrated B2B manufacturers. Think about the scale, the control over the process, the potential efficiencies.
Yeah.
It's a foundational piece of that huge revenue target.
So building the manufacturing muscle to match the ambition, and clearly that international push is central too.
Absolutely. It's a cornerstone. They're aiming for exports to make up 25% of total revenue by FY27. That relies on recurring global orders and, as we discussed, really establishing that presence in the Middle East via the Dubai office.
And domestically, still focusing there too.
Yes, they're not neglecting the home market. The plan is to keep consolidating their leadership by adding more clients and expanding their product range across different categories: castings, chains, Mangal sutras, bangles, often using sub-brands.
Okay, so growth on all fronts. But what about the quality of that growth? Are they targeting better profitability alongside the bigger revenue number?
They are. The target beta margin is set to improve to 4.5% by FY27.
How do they expect to achieve that margin expansion while growing so fast?
A few ways. One is focusing on design premiums, creating more unique, higher-value designs that can command better prices than basic items. Another is operational efficiency, specifically reducing gold loss during manufacturing.
Which can be a significant cost.
It can. And optimizing working capital through those advanced gold contracts and also using gold metal loans. Plus, they mentioned enhancing their internal systems, using ERP software to track everything better: gold flow, inventory, receivables. That's crucial for managing complexity at scale.
And those specific efficiency targets.
They're aiming for a working capital cycle of 52-55 days, which is quite efficient, and a sustainable return on capital employed ROCE above 30%. That signals real discipline in how they use their money. It's not just growth for growth's sake.
Right, it sounds like a very holistic strategy. Grow big, but grow smart and profitably.
That really seems to be the mantra. They summarize it as being frugal in operations and relentless in design innovation. The goal is this future-ready, asset-light, relatively speaking, for manufacturing, globally competitive company, really pushing that make in Bharat for the world idea.
And one last detail for anyone watching from an investor perspective.
They did note that as of the end of the quarter, June 30th, 2025, there were no pending investor complaints, which is always a good sign regarding governance and relations.
Okay, so wrapping this up, what does this all mean for you listening in? We've covered a fair bit on Sky Gold Diamonds Q1 and their strategy.
Yeah, the key takeaways are pretty clear, I think. Significant growth, both revenue and profit.
Driven by smart moves, product innovation, big client wins, that determined export push, especially Middle East focused.
And then there's that incredibly ambitious but seemingly well thought out vision for FY27.
Right, the massive capacity expansion, aiming for global leadership, but with a focus on efficiency and profitability targets too.
It really gives you a window into the dynamics of the B2B jewelry world and how Indian companies are thinking globally.
Definitely. And Sky Gold is explicitly framing this as make in Bharat for the world. So maybe final thought to leave you with. As they push hard on exports and build this huge integrated park, what do you think are the biggest new challenges and maybe opportunities they'll face in really changing India's role in the global jewelry supply chain?
Yeah, scaling that vision globally brings a whole new set of complexities, something to mull over.
Indeed. Something to think about until our next deep dive.